Hope everyone's having a good start to their day. Happy Taco Tuesday to everyone out there. We're just getting started here with this week's edition of Back to the Futures with me, Markets and Mayhem. And what a crazy several days it's been. We had a VIX that was nearing 30. Now we're waking up to a VIX around 18. Really, a lot of volatility compression happening in these markets. And that's some fear of missing out, I would say, is a big part of that. That is to say, we get a little bit of a dip. Everyone wants to pile on. They don't want to miss the rally. There's still that mentality of buying the dip, which kind of gives us a sense that we probably have some room higher from where we are right now. So I think this is going to be a pretty interesting show today. Let's dive in here. First, risk disclosure, the obligatory, the mandatory, but really it's important because 90% of traders don't make it because they don't manage their risk. So I don't even really want to look at this from the legal implications. Let's talk about the practical implications. If you're not managing your risk, you're not going to be able to enjoy your rewards. It's that simple. If you don't treat trading like a business where you want to come back tomorrow, next week, next month, and you want to have that liquidity so you can keep trading, then you're simply gambling. You're not running a business. You're running a gambling built on emotion. And that's something that can be really self-destructive. And my goal is to help you all build consistency, sharpen your edge so that you can become better traders, so that you can hopefully make it at this game. So manage that risk first and foremost. That is the key takeaway from this. Now, I've been doing this for about 20 years. Started trading in 2005, started investing the profits of that trading in 2006. Self-funded, really didn't do any of the prop firm stuff, which is it's an interesting thing that's going on these days. It's not really for me. It kind of reminds me of the bucket shops of yesteryear. And if you don't know what those are, I suggest looking them up in their history. But to each their own. If people can navigate all those crazy rules and the potential ways they can take your gains away from you and you're still winning, then you're doing it. You're doing it right. And the whole business model is built on people not being able to do that. The whole business model, those prop shops, is basically built on people not following the rules and giving up their money. So for me, it's always going to be trading my own capital. That's what I encourage folks that I work with to do. But again, whatever works for you, I can respect that. That all being said, however, one thing that I think is an area we should all consider working on is how we manage our emotions when we're trading. If our emotions are helping us to make better informed decisions, then you're in the minority. The vast majority of people, their fear causes them to get out of positions too early. Their greed causes them to ride losers for too long. Think about it for a second. How often are you sitting in a loser just hoping it gets to break even? And how often are you in a winner just wanting to take the gain as quickly as you can? We need to flip that switch the other way. You need to ride those winners and cut those losers. And if you're coming in and you are making trades and you don't know exactly what your risk threshold is or your stop out point and where your potential reward level might be, or at least where you say momentum is no longer in my favor, you're not trading. You've got to come in with a system. It's so important to have a systematic approach. It doesn't need to govern 100% of your trading, but it should be your baseline. What does that mean? Well, discretionary traders often just lean into gut feel, maybe just looking at a chart, but not necessarily back testing strategies or having defined signals for entry, exit, and risk. I think taking a more systematic approach helps us to improve our consistency, but also our accountability to ourselves. A big part of a systematic approach is keeping a journal. Do you know why you're trading what you're trading? Do you know what the risks and reward may be? How are you feeling going into that trade, during that trade, as you exit that trade? Because reviewing that journal in the weeks and months and years down the road to figure out what works for you and what doesn't is a key part of becoming a better trader. Think about that. It really is about accountability. And the reason that I like to kind of try to drive a version of this message home pretty much every week is because I'm hoping it resonates with the folks that are out there trying to figure out, how do I make this work? Seeing a lot of other people that appear to be successful and wondering why it's not working for them. The reality is that for most people in their early formative stages of trading, it doesn't work for them. They struggle to hang on. It might be one of the most difficult tests of your psychology that you've ever experienced. You get to know a lot about yourself, your weaknesses, your strengths. You can address your weaknesses, you can lean into your strengths. Here's an important tip to consider. What works for me or someone else that you're watching may not be what works for you, and vice versa. We're all wired differently, and there's a beauty in that. You get to figure out how you're wired, what works best for you, lean into that, and enjoy the journey into better consistency and profitability. Don't just follow. Build your own path. That's the biggest part of this journey that I think a lot of people miss. It's not only the risk management, but knowing you're only accountable to you. No one else is going to save you. No one else is going to make you a profitable trader. It's all about you. I can't emphasize that part enough. So let's talk a little bit about the weekly pivots. I'm going to post these out on social. These are my bullish above, bearish below levels. And we can see we're above both of these. So we're looking bullish on a swing time frame and even intraday. So I'm going to post those out on Twitter or X, whatever we're calling it these days. Y'all are welcome to hang out and take a look at that. And we're going to move on to the next chart here. This is a chart of the S&P 500 futures. This is my swing pivots chart for the futures. And we can see that level, this week's pivot. We just made an aggressive push above it yesterday. We had a bullish fair value gap. We pushed above the EMA 21. And we're back into much more decisively bullish territory going into the rest of this week, as long as we're able to hold above 6743.75. And we're not really extended yet. If we look at some of the oscillators I like to look at, like NIMO, NAMO, the number of stocks above their 20, 50, and otherwise, we're not seeing that extension yet. What we are seeing is a lot of roll-up of positioning to SPX 7000. Wall Street wants 7,000. They want that big 7 handle with the 3 zeros after it. So what does that mean? You've got larger trading desks that are rolling their positions higher in an expression of confidence that the market can continue to hit new all-time highs as we close out this year. And I think they're likely accurate. Obviously, we've got earnings season coming up. It's going to really get big next week and the week after. So we're going to key off of that for some of the price discovery that happens in markets. But notwithstanding any downside surprises, it does seem like we're on track to have that sort of Santa Claus rally. That is to say, we're past some of the worst seasonality of the year. We had a vol episode. It actually helped to build into that higher low that we see on the chart here. This was that vol episode. This is that higher low, higher than the August low, higher than the April low. So that caused a de-risking that actually led to volatility blowing out enough that vol sellers could come back in, load back up, and start pushing this market higher. Momentum traders joining in, Wall Street trading desks looking at rolling those positions up to SPX 7000. And of course, us retail, we're still buying the dip. That's where we are right now. Now, obviously, things can take shape very quickly. There could be a breakdown in US-China trade talks. There could be some undermining of the AI narrative during earnings. There could be some other issues that take shape if there are negative wealth effects in the market as to how high net worth consumers engage the economy. But where we are right now is still very structurally bullish. So there's risks out there on the horizon. You always want to be mindful of them, but you don't want them to be in the driver's seat. They're the sort of virtual folks you consult when you want to know how you're supposed to hedge your risks in the market, right? You look at the risks that are out there on the horizon taking shape. They exist. They're there. They're just not necessarily today, tomorrow, next week. So I think that where we are right now, trading the market that's in front of us for today, we likely still have some upside potential here to go back to some of those all-time highs and possibly start making a push above them. Momentum favors it. And this morning, we've got a little bit of volatility pre-market, but that is not too rare. Typically, within that pre-market and first hour, you're going to have some volatility. And then you really want to watch the flow and to get a sense of size for how much dynamism the market might show you, you can look at things like the 20-minute opening range, which will give you a sense as to just how much movement you might get in that day, notwithstanding vol catalysts like a random Trump headline. Now let's talk a little bit about some of the exclusive deals that we've got on offer. You can get up to 40% off of Bookmap by visiting traderade.com/bookmap. That's traderade.com/bookmap. Scroll down to the special offers. Got some pretty cool stuff going on at Traderade as well. We've got our SPX options visualizer, which we'll talk about a little bit during the stream. And we're about to build out options visualizers for about every optionable ETF, stock, etc. to plug into Bookmap and MotiveWave. So I'm pretty excited about that. But definitely, if you haven't checked out Bookmap, you've been meaning to do it and waiting for a discount, this is your opportunity. Traderade.com/bookmap. And the folks at Bookmap would love for you to check out their free blue jacket promo. They've got a contest going on. Share your winning setups on X, Instagram, or LinkedIn with the hashtag free blue jacket for your chance to win up to $600 of subscription value in prizes. Also, Bruce, a friend of mine, a really important member of the Bookmap team, will be launching his pilot program. I highly suggest checking this out if you want to learn more about using Bookmap to sharpen your trading edge, something we're all about at Traderade as well. And then finally, the Bookmap Academy session has changed. Its schedule now is for today at 4 p.m. Eastern. Now, with all that being said, let's get into Bookmap. On screen, we have Bookmap. We're going to zoom out just a little bit on this heat map. And what this is showing you, if you're looking at the areas where there isn't price action, is where there's liquidity, both currently to the right of this white line and prior. This is showing it in the form of a historical to present heat map of that liquidity. So it's a very unique way to view liquidity in the market. And you can see during the overnight session, somewhat volatile, pretty choppy going into Globex. And then as the Asian auction really started to take off, we saw some de-risking. Into the European auction, we started to see some basing and consolidation, and then we started to make a push higher. And it's really only in the last hour or so that we're starting to give some of that back. So we're just going to zoom to a 2-hour. You can kind of see that rollover pattern. You can see some passive selling happening here too. There's a 100 iceberg lot sale that happened at this higher low here. And then we started to make just a little bit of a move lower. Let's take a look at the NASDAQ overnight as well. Very similar look overall. We'll zoom out just a little bit more to show part of Globex there. So you can see off the US evening open, just a little bit of a bid. And then the Asian auction really starts to take off and this thing slides. European auction has us consolidating, get a little bit of a bid, and then we drop off. So it's a similar look across the S&P and NASDAQ, but overall, I'm still coming into today constructive given what we're seeing on these longer term charts. So we're going to take these both out to 20-minute charts. Let's take a look at gold as well. And we're going to zoom out to some longer term charts after we look at these overnights. And chart requests are welcome. If anyone has any chart requests in the chats, let me know. Good morning, Low-Key. Good morning, STT Voyager. Thanks for tuning in. Good morning, Massive. So gold under just a little bit of pressure this morning. Down about 3%. Seeing silver down about 4.6%. Definitely some volatility coming into the precious metal space. Let's zoom out and take a look at some of these longer term charts. And just give me one moment. I'm just going to bring that up on screen for us. All right, here's a chart of gold, and we're looking at this on a daily. I want to zoom it out to a weekly as well. And you can see if you're watching gold and you're looking for where you might want to rebid this thing, we're quite a ways away from the 20-week. The 20-week has been an area where when gold dips, it's been a great rebid area for really the better part of 2 years. So I'm watching that 20-week moving average on gold. If we did hit that, it would take us down to about $3,700, depending on when it played out. Maybe a little higher, 38 if it was later in the future. But that's an area that I think is worth watching for a rebid. We are extended on this move. There's no doubt about it. RSI at 82. You know, you've seen this thing kind of go parabolic. If you look at it on monthly chart, it's just straight up. So we're due for a consolidation, if not a corrective impulse. That doesn't mean that's going to be what happens, but it would be the healthiest scenario. You've got a similar look in silver. Silver also starting to go quite parabolic. I still think, though, this is part of a much bigger breakout. It would be healthy to see consolidation, and it would be healthy to shake out some of the weak hands that just keep buying these highs here so that we can make a more formative rally. We also need to support the market structure, and the only way that can happen where we can build some more areas of support below is if we consolidate or even correct before zooming higher. With precious metals, you don't want to see them just go straight up. You really do want to see them consolidate those gains, kind of stair step higher rather than just move higher parabolically. Those parabolic rallies tend to end poorly. So it's just something to take into consideration as we're trading these. And with silver, I think it's worth watching the 50-week moving average. It doesn't quite interact the same way as gold with the 20-week, but that could be an area to watch for at least gauging sentiment. But gold is pretty beautiful with regards to this 50 or this 20-week moving average. That is the rebid zone on this thing. It's pretty clear. Now, if we go out to crypto, we could take a look at Bitcoin. Bitcoin is another one that I'm watching for a potential rebid, and I'm watching the 50-week moving average. You can see that's been a rebid zone for Bitcoin for quite some time. We get down to the 50-week, maybe we chop just a little bit below it, and you get a big bid that comes in. We got right close to it here as well on that last impulse move lower on the trade tension renewal. Didn't quite kiss it, but I think we could still get back down there, and that would be the area where I'd want to build some fresh swings in Bitcoin if we're able to ping it or even get below it and then get right back above. I want to see a successful test to qualify that momentum is still intact. And I also want to mention, using RSI to gauge something being overbought, it doesn't always work. Here's RSI being very stretched to 90 on this move in Bitcoin in late 2020, early 2021. It had a minor fall, right? It fell like 20-30%, which in Bitcoin terms is not much. And then it went way higher. And guess what? Up here, where's RSI? It's not showing we're overbought before it has a big fall. You can see similar looks here. Look, RSI over here, up at 90. What happens? It consolidates and drifts a little bit before making a huge push higher. This is why you've got to be careful looking at these oscillators as if they're just, a pure view into this instrument's trading conditions. RSI is handy, but in the context of a rally, overbought doesn't mean that much. Just like in the context of a bear market, oversold doesn't mean that much. Now, in a rally, if you see RSI dip below 50 and you're still in a constructive momentum phase, that can be your buy the dip opportunity. Just like in a decline, if you see RSI peak above neutrality or even get overbought, that can be a reoffer opportunity. But you've got to take momentum into context. That's one of the most important parts about applying RSI to your trading strategy, is understanding it doesn't have a lot of value overbought in an uptrend or oversold in a downtrend. I see it used all the time by folks. It's fine if it works for you and your system. Some instruments behave better with it than others. But my own personal experience has been it should be one indicator of many you look at to judge the instrument's health. Something to think about for folks out there, because I see it used all the time, and I just wanted to put a little reality check out there. Just like Bollinger Bands, they're used all the time, and they're really not used appropriately, and perhaps we can get into that later, maybe on another session. And we got a comment from a user saying, agree, silver has more to go, currently out, but will reload. Atlas, I agree. I think silver got a bit extended. It's got to regroup, consolidate, maybe correct a bit. But I'm looking at $72 an ounce for the continuation move for Q1 2026. I think that's where we could go on silver. And then got a comment on my YouTube here from Loki. I have to say, Mayhem, the best video you've ever made is Trading Psychology 101. I learned a lot from that one. Well, thank you, man. That means a lot to me. I really appreciate that. I've been meaning to get back into making some of that evergreen content because, with you telling me it's helped you, that's exactly why I make that type of content. Psychology is one of the most difficult parts of trading. It's not just mastering the market, it's mastering yourself. And in comparison, mastering the market can be easy versus mastering yourself. So I'm glad you found that video helpful. I do want to make some more content along those lines because that's the biggest area I see people struggling with. The battle against their own psychology, against their own demons, so to speak. Atlas weighs in saying his target for silver is 70. So there you go. We got multiple people looking at this. I love trading gold and silver. I think it's been one of the most fun markets. It had been such a long time since gold and silver were fun to trade. So it's so cool over the last 2 years that it's gotten back to being a market that's exciting to trade. I love it. So let's go back into Bookmap here. We can see gold under some additional pressure as we approach the market open. We've got Bitcoin on screen here. It's also under some pressure. Had a bit of a swoon around 9:10 a.m. And we've talked about this one, wanting to see it get back to that 50-week moving average. Gold getting back to the 20-week moving average. Watching silver around the 50-week moving average. These are some of the areas we want to watch. Now, obviously, moving averages are not magical. They're really just averages of price over certain periods of time. They're very backward looking. But why do they work? Let's go back to psychology for a second, shall we? They work because people believe they work. They work because traders use them, because algorithms are programmed to use them. So it doesn't really matter what the science is behind a moving average or the lack thereof. What matters is that certain instruments key off them. And if you can notice that behavior, you'd be remiss not to key in on it yourself, right? So that's one of the reasons that we do watch moving averages as they pertain, like for gold, that 20-week moving average, and for Bitcoin, that 50-week moving average. Those are worth watching very closely. Those are areas where you see rebids, and if you don't see that rebid, if that test is unsuccessful, that's a pretty good indication that momentum is shifting the other way. Now, we are just about 3 minutes away from the market open. We don't have anything on the calendar today that really matters that much. There's some payment and innovation conference from the Fed. I don't even think that's going to have any implication for the market. There's some central bank speak from the ECB's Coker, and then Besant speaks at 3 p.m. Waller speaks at 3:30 p.m. Texas Instruments has an earnings call at 4:30. Netflix earnings tonight. That'll be fun. That's probably the highlight of our day is Netflix earnings. Although Texas Instruments, to be fair, is kind of a good macro indicator because they have so many areas where their chips go. They can kind of give us a sense as to what different parts of the global economy are doing. So both of those probably worth watching, but not really market moving given that they happen after hours. In fact, the biggest market moving data that we get this week is CPI. This is September CPI, but because of the government shutdown, it's been delayed till Friday, October 24th. So I think, overall, notwithstanding any calamity at Netflix or any kind of crazy headline risk, I think this market can chop sideways to grind higher to new all-time highs as we approach Friday. I think Thursday you might see a little more vol early and late session just-in-time hedging ahead of CPI data. That's a pretty normal thing that happens. But overall, I think we're kind of on cruise control for now. We've got a lack of volatility catalysts. Of course, we'll want to watch Tesla and IBM earnings tomorrow as well. But, Tesla doesn't tend to move the markets the same way that the Mag 7 do. So next week's going to be really important. And we are approaching the market open here. We've got a nice bid coming back in the S&P futures with 200 passive orders that down there. That's a iceberg buy of 200. So there is definitely a motivated buyer coming into this market just ahead of the open, pushing us above the point of control. And you can see there is some confluence between the point of control and that vol trigger level. Yesterday's most active put strike was there as well. So this is going to be an important level for my intraday pivot. The intraday pivot, I'm going to look at right here. 67, 73.75. Bullish above, bearish below. That simple. The market has given us enough data to tell us this is a level that's important to it. So 67, 73.75. That's the confluence between yesterday's most active put strike, the vol trigger, and the point of control. And I'll put that out on social for folks to see as well. And we saw some attempt at selling aggression there, pretty well absorbed by buyers so far. Let's take a look at the NASDAQ just to cross compare. NASDAQ a lot more volatile here. Got right up to the point of control and rejected, actually getting smacked down here. It's quite a contrast, but ES is starting to see some of that pressure now too. NASDAQ making new session lows here. And ES overall holding up a bit better than the NASDAQ, seeing some buyers attempt to intervene before it makes a low that takes out that pre-market low versus NASDAQ, where it had no problem doing that. Although I'll say that the selling aggression on the NASDAQ isn't that intense. It's a bit more of buyers not stepping in versus ES here. The sellers are trying a bit, but the buyers are stepping in and buying into this weakness. And the only Mag 7 stock that's really got a bid so far here is Amazon, up 1.48%. So I've also got a bit of a short squeeze playing out in TRIP, TRIP. Up about 6% here on decent volume, 330,000 shares traded. Short interest of 28% on TRIP. We'll bring that one up just to take a look at what's going on in that squeezy stock. I'll load that up. We also have NVIDIA on screen. NVIDIA is seeing some pressure this morning as well. So NVIDIA getting down to key 3 positive. This is an area of call exposure that may offer a little bit of support. You can see on the NVIDIA book, though, there are more offers than bids by about 2.7 million. And there's a pretty large area of support in NVIDIA around 180, where we've got key 5 positive, yesterday's most active call and put strikes all around that level. So that's another area to watch. If we fail below key 3, 180 should offer solid support in NVIDIA. Let's shift over to TRIP. I'm going to let this digest for a bit. And I'm going to just take a few things off. But yeah, right off the gate, TRIP had a pretty explosive open here. So we'll be watching that. That's now up 7.3%. We talked about it when it was up just about 5%. So it's continuing to make that push. Not a huge amount of volume, but still worth watching TRIP. Really the only thing coming up on my short squeeze radar so far. Let's shift over to silver here. Silver also weak like gold, rolling over a bit in today's session. You can see sellers dragging down the point of control. And I mentioned this as well because we do see some interesting sweeps coming into SLV calls. Right now, the 45 strike, just 2 cents away from spot, seeing 127,000 in premium paid for that. And that was a 36-to-1 vol to OI ratio for the calls expiring next week on the 29th. So that's a bit aggressive. And yesterday we were seeing some pretty big sweeps into SLV calls as well. So it feels like there's still some large desks out there, likely institutional with the size of these orders, just sweeping into higher strikes on SLV, looking for this rally to continue ultimately. And folks, if you're out there, if you have any questions for me on Twitter, YouTube, Substack, Kick, Twitch, Discord, any of the places we're streaming live right now, please feel free to pop in the chat. I'm checking those chats regularly to see if I missed any of your questions, and I want to get to every single one. If there are any more, I'm happy to answer them. So seeing silver pop a bit off its lows. Let's check in on Bitcoin. Bitcoin also consolidating, but coming off of those lows that we saw just a bit earlier. There was some kind of liquidation event around 910 or just before that. We're consolidating and starting to try to build a base. Let's move back to the S&P. S&P, like we talked about, really didn't look as bad as the NASDAQ on that early move. You saw a lot of buyers intervening. And so while it did make a new regular trading hours low, it didn't take out the pre-market lows like our friend the NASDAQ did so violently. So I do like the way the S&P looks for longs better than the NASDAQ so far this session. Marge asks, what indicators on TradingView do you think is best for market profile, vol profile, etc.? I will be the first to say I don't use TradingView anymore because the accuracy of data like that, volume, for example, is not that great. And so if you're relying on that data to make trading decisions and it's not accurate, then you're not going to be able to make the same kinds of trading decisions that you should. So my approach is use a high quality data provider like Rhythmic, plug it into MotiveWave or whatever your favorite charting software package is, and build your volume profile that way. That way you can have a more complete and accurate volume profile. S&P getting a nice bid off that low. It basically came down, retested that pre-market low where we saw that 200 iceberg buyer come in. So we knew there was some demand down there. Once again, we got down to about that level. Demand started to come in, this time from active buyers. And they are continuing to make a push here above that pivot we talked about. The bullish above, bearish below level of 67.73.75. So I like seeing where we are right now. We're building acceptance above my intraday pivot. We've got decent order book, about 4.1 thousand in excess of bids versus offers. That's constructive to see on the S&P. That's the delta here on the lower right. This up top, this is the current offers. Below, current bids. The delta, 4.3 thousand. So that's solid. We're waiting for the order flow from today's options to come through. Usually starts in the next 5-10 minutes, so we get enough to really start factoring it in. And if you're enjoying the stream, feel free to share it out with others, give it a like, and consider subscribing to my YouTube, the Bookmap YouTube, wherever you're watching this. Follow along for more. I'll be back every week, Tuesday, 9 a.m. Eastern, for Back to the Futures. So again, if you're just tuning in and you're looking at what's on screen here, we've got the Bookmap heat map on screen. It's a liquidity heat map that shows you where there are resting bids and offers. So you can see the order book here, and you can see where those offers overhead and bids below exist, both in the past and to the right of this white line in present time. And what we can see here is we're balancing above the point of control. I talked about my pivot for today being 67.73.75. So we're starting to build some acceptance above that pivot. We don't have a particularly enticing opening range of yet. That's kind of the least exciting part of what we have. It's like a 7.5 handle opening range, which is kind of yawn material so far. I'd really love to see that be double that or more. That is to say 15 or more would be much more enticing for some dynamic price action during today's trading. Do I think that the Greeks are important for intraday? I absolutely do. Yes, in fact, we see that play out pretty regularly when options are in the driver's seat. The most active flow and some of those key levels of exposure tend to be pretty important levels of support, resistance, and kind of magnetic. If we talk about things like the hot call when it's in the driver's seat, when it's got, say, 30 to 40% more flow than the most active put strike. King Elf, I've been going over the NASDAQ, S&P, gold, silver, Bitcoin. We've been all over the map here. So I'm happy to go over NASDAQ. NASDAQ, like we talked about earlier, it looks weaker comparatively speaking than the S&P. It is now cracking to new lows, and we can see some selling pressure now increasing the S&P, now looking like it's making new lows here. So NASDAQ cracking to new lows. S&P now cracking to new lows. So the one upside of this, even though we're getting below that pivot area, is we are seeing at least the range increase. Opening range now about 9 handles. And this is some determined selling. This is unique for today so far in the S&P. This is the most aggressive the sellers have been during regular trading hours so far. Marge, I don't have Tesla configured for today's session, but I'll look at adding that in the future. But I would say the stock probably becomes a bit more volatile ahead of earnings. So we have cracked that daily pivot. We're now starting to build some acceptance below it. We could see there was a small stop run, about 38 buyers stopped out, or buy contracts stopped out there on that move lower. Got about a 10 handle, maybe you could call it a 10 and a half handle opening range. So starting to become a little more dynamic. I tend to look at the opening range on a 20-minute time frame to get a sense as to how exciting the trading day may be and where some of the key levels to watch are. And I'm actually going to be giving away a free tool to map out that opening range. It'll default to the 20, but you can set it up any way you want for Motive Wave. So for folks out there using Motive Wave, look out for that as well. Loki asks, is the options visualizer standard on Bookmap Global 1, or is it a special add-on? It is a special add-on I built for Bookmap using an algorithm that I've been tuning up for about 3 years now that's focused on options flow and positioning, and making inferences as to where the dealers have their positioning and why those levels may, as a result, be support and resistance, and then where those flows might help to take price during the trading day. So the options visualizer right now is just for SPX, but it is going to be expanding out to the NASDAQ, SPY, Triple Q, NVIDIA, Google, Microsoft, Apple, Amazon, GLD, etc. very soon. And it's all going to be under one package. So if you lock in the rate that you're paying today, which is $39.99 a month, when we upgrade to the new package, you'll be able to lock in that rate, even though the price will be going up for the total package for new users. So this is, you've heard it here first. The options visualizer is about to get a lot better with a lot more instruments, and people that lock in today's prices will keep those prices for the lifetime of their subscriptions. So as long as it's an active subscription in good standing, you lock in today's rate of $39.99 a month. And that will then expand to a bunch of different options visualizers that you can plug in either to Bookmap or MotiveWave. So you've got the option for both charting platforms, and it works with DX feed, Bookmap data, and Rhythmic data. You can learn more at traderade.com/SPX. So we are starting to see a little bit of flow coming through. I'm just going to take a look. I've got a dedicated stream on the Traderade Discord where this posts every 2 minutes, so we can see that for SPX. So far, those flows are balanced between the puts and the calls, and we're just going to watch that. Right now, we're applying about a 50-60 handle range between the top strikes, and they are in balance. So we'll see if that balance stays. You can see the midpoint on screen. You can see some of that flow starting to come into the visualizer as well. So if the flow remains balanced, the midpoint stays on screen, and that suggests you have more of a day of chop or consolidation. If one side starts to lean a little more heavy, that midpoint disappears, and you'll see where that flow is concentrated based on the volume and also some of the notations. We do see further pressure here on the S&P this morning, just starting to crack to new lows. You can see the same on the NASDAQ. And we are starting to see some real selling pressure in gold, some exhaustion happening from the sell side, but overall gold just seeing some liquidation this morning. So again, this is what you would want to see. If you're bullish of gold, you need it to be more of stair-stepping higher, 2 steps forward, 1 step back type of thing, than just straight up like a rocket ship, because parabolic moves end badly. So it needs to build structure so you have areas of support for the market to fall back to. Hopefully, that's more of what we're going to see rather than just sort of this continuation up and away that we've had, which is, in my opinion, getting a little ahead of itself. That's not to say I don't think gold can keep going higher. I think over the intermediate term, $5,000 an ounce is pretty darn certain. But I think in the near term, a pullback is healthy and desirable because it can help us to build some healthier market structure. Let's take a look at silver. Similar look here. Silver cracking below the point of control, not really looking back from there. Talk about opening range. Gold and silver are giving us the opening range dynamism today. It's not really the equity markets, it's the precious metals. Let's take a look at Bitcoin. Bitcoin also a bit weak here. I think I need to put my price levels on that one. So we'll do that. It'll take a minute to fact. There we go. There's the price levels from the market open. Just gives me a sense as to how wide the ranges are. I like looking at this. It's kind of helpful for me tracking vol as we get the markets opened. So Bitcoin also pretty chunky opening range there. And S&P just continuing to be quite volatile, but stair-stepping lower. So we are below the level we talked about earlier, that 6773.75 area, bullish above, bearish below. That's also where the vol trigger is. It's the point of control. And we're starting to see a microstructure that suggests we could see more downside, one of lower highs and lower lows that you could argue has been going on for some time. So you had that rollover. You made another lower high. Now you're making a lower low, and then you have a microstructure that has more of that kind of embedded within it. Lower high, lower low, lower high, lower low. So it is looking a little bit weak here. I really can't get bullish on this market unless we're able to break above our daily pivot and build some acceptance above there. I'd also love to see flows improve. Right now, flows are still heavy on puts. So you've got the hot put and warm put with 3,000 each, the hot call and warm call with 2,000 each. So it's it's still in excess, about 50% favoring puts versus calls on SPX. So that's another thing helping to weigh us down a bit this morning. Because if you think about how options work, When a dealer sells a put, they've got to hedge that. And the way they hedge that is shorting some ES so they can pay off that contract without losing money if it actually is profitable. So that is a liquidity negative event. Put buyers enjoy some asymmetrical leverage. They can potentially have an impact on the market if there's enough of that flow. And just checking in on the leadership stocks, NASDAQ down a bit here. We've got NVIDIA down about 0.8%, Broadcom down over 1%, Micron down about 1.6%. A lot of weakness in some of these semiconductors. Microsoft's about flat. Amazon's up 1.6%. Apple continuing yesterday's gains up about 0.8%. So it's a bit of a mixed picture in tech. Tesla down about 0.6%. Google down 1%. Meta about flat. Big weakness in Philip Morris, though, down 6.5%. Robinhood or Hood down 2% here. It's a very mixed picture across the market. Got some more bullish flows going into SLV calls here. 140,000 in premium paid for the 45 strike. This is another one that's expiring on the 29th of October. And gold, wow, some juicy calls going into GLD. This is kind of illustrative of some of the excitement and the FOMO here. So this is for the 393 strikes. Spot's currently 388 and change. 1.29 million in premium with a 6-to-1 vol to OI ratio for the gold calls expiring on Halloween. So you are still seeing that reflexive impulse to buy into any weakness on a lot of these precious metals. The ETFs, some of the miners, this is an area where people are still very excited. And whether that serves them or not remains to be seen. Again, I favor a pause or a corrective impulse on these before we can build. That doesn't mean that's going to be what happens, but that would be the healthier scenario that leaves us with more room to run higher. Put flow continues to remain heavy on SPX, 10,000 between the two most active put strikes versus 8,000 on the two most active call strikes. And we can see that here on the visualizer if we zoom out a little bit. You can see some of that flow, and you can see that it's starting to pick up a little bit more on the call side, which is good. Let's see what the next refresh looks like. So I've got a couple of questions. Mitchie, which data feed for options are you using? I'm using one that I built. So I'm using the SPX options visualizer. This plugs into CBOE. So it plugs into where most of the options trade. And I'm analyzing that flow in near time, both for the SPX options visualizer as well as on the Traderade Discord. So we've got kind of some really neat options tools that I built. The SPX options visualizer plugs into Bookmap or MotiveWave. There's going to be visualizers for just about all the optionable instruments soon. And that's something that I expect to be able to put out later this quarter. But then there's also the tools that one can use on our Discord to be able to map out key gamma levels, to watch the SPX flow visualized in other ways. So got a lot of cool stuff for options, but it's all based on my programming and algos analyzing flow from CBOE, where most of the options trade. So Dobrin, I would say, focusing so much on the VIX might lead you astray. Because the VIX is just really a derivative of a derivative. I mean, you're looking at the volatility of options in the S&P 500 complex with a 30-day forward-looking basis. So if you're focused too much on a derivative of a derivative, you're kind of like sitting in Plato's cave watching the shadows dance on the wall, not necessarily being aware of all the other things that are making that happen. So I would advise, if you really want to learn more, focus more on SPX. That's what drives the VIX. The VIX is simply a gauge of the expected 30-day volatility of the SPX. So like right now with the VIX trading around 18, it's basically factoring in price swings of about, 1.3% on average per day. You're basically taking the VIX, dividing it by 16, and that's the expectation for average daily volatility ranges. And the VIX is a unique instrument because it's not only a derivative of a derivative, but it's something that gets a lot of selling. It's a lot of vol selling that suppresses the VIX, and so it's not necessarily going to perform the way you might expect. It's extraordinarily volatile too. You're going to have quick pops that get you up. Like last week, we got up to 28 on the VIX, and then this week we're dropping right back down to 18 in just a matter of days. So it's extraordinarily volatile at times, and other times it just chops sideways for months or sideways to lower without doing anything. I would say if you're new to this, don't start with the VIX. Start with a broader index like the S&P, or start with commodities where you can just purely follow momentum rather than just looking at the VIX itself. Because really, the VIX should be part of a hedging strategy, not part of a core trading strategy for the vast majority of traders, in my view. We're seeing S&P extend its declines here. We did have a 20-minute opening range. It was about, you could call it like a 14 handle range. It's not bad. And we have this sort of stair-stepping pattern down, this trend microstructure lower. We are below the bullish above, bearish below pivot. You can see we retested it, rejected, and we've just been kind of grinding lower from there. So overall, based on our pivot and based on the flow, which is again favoring the puts in the options world, it looks like we still have some more downside to go here. You can see the hot put and warm put down there, trading 7,000 each versus the warm call, hot call, 5 and 6,000, and that just gives us a sense that this flow is continuing to look for lower lows. You can see the options flow is concentrated down there, even below the vol trigger and gamma flip level. So my thought would be, we came in today looking for some potential upside, but respecting the market in front of us. We can have our view, but this is why we have our pivots and we look at flows and levels, because the view doesn't matter if the market has other plans. So if you're looking for volatility expansion, what you're looking for is uncertainty. If you're looking for uncertainty, what you're looking at really is a wider distribution of price outcomes being priced into SPX options. That's one of the things that really drives the VIX, particularly on the put side. So I think you'd be watching flow and you'd be watching positioning for a wider distribution of expected price outcomes as a part of driving the VIX. So it wouldn't be Greeks on the VIX itself, it'd be watching SPX and the impact that has on the VIX. You could probably backtest some of those strategies. Folks, if you want to learn more about what I'm up to, visit www.traderade.com. We've got an awesome Discord with a great community, lots of cool research and tools. If you want to learn more about the SPX options visualizer, visit traderade.com/SPX. That's SPX. And check out the content. We've got a video that talks about it, as well as a manual you can check out to see if it's a good fit for you. And remember, we're going to be expanding the number of tools and options available on that quite soon. And if you want to check out Bookmap and get up to 40% off, big 40, 40% off, visit traderade.com/bookmap, scroll down to the special offers. Lock in that discount for the first billing period of your subscription. I want to thank everyone for tuning in to this week's episode of Back to the Futures with me, Markets and Mayhem. Had a lot of great questions and feedback. Appreciate the audience. You guys are great. I'll catch you next week, 9 a.m. Eastern. Have a great rest of your week.